Good morning, Chris here with some current support and resistance levels for the Dow Jones Industrial Average. I'm going to avoid the S&P 500 for this time around. Now, first thing first, I'm using the DIA, which is the ETF for the Dow Jones Industrials, and one of the reasons why I'm doing this, it's just because the support levels are a little more clearly outlined. The index is a little more sloppy than this in terms of finding where the exact levels are. And just as a quick accuracy check, let's see. This one's trading at 125.60. The actual industrial average is trading at 12.588. So we are very close. It would only be a 1 cent tracking error in terms of this versus the actual index. So all you need to do to get corresponding index levels, just take this, multiply the number times 100, and you have your support or resistance level. So right now, it looks like the stock market's going in a pretty strong downtrend. Like, bring up the RSI right now. You see that the RSI is pretty much sitting right here, just ever so slightly below the oversold level at the bottom of the screen here. And actually, if you look back, you see that most of the time when the daily RSI has broken this level, we see it's broken it in August, it's broken it just this May, and it also broke it back in November. There was normally a bounce after it. Actually, in these two cases, it looks like first it makes the oversold low, and then it normally chops around a little bit. Same with this one right here. You see that the oversold low was around 12,250. The actual low was just around 12,000 on the Dow. So just from that point of view, we can see that it actually leads just a little bit. So if we're of the opinion that the market will bottom, then we would say that it might churn around right here before reversing straight up again. So that's just one opinion, but let's actually dive into the reversal levels now, the support levels. So we are going to use Fibonacci retracements. So I'm going to draw from the top here, which is the top closing price, to our first our first support level, which is right here, and we see that the market, from this low to this high, it is sitting just around the 38.2%, and we'll actually flip that, so it's 61.8% retracement of the previous upswing. So we see a support level just around 12,560. Okay, so next one. Take this, duplicate it, and bear in mind that there's going to be a very small margin of error on this, and that's just going to be human error for me actually drawing this. Next one, if I go to this low right here, change the color, and of course I only do this off the cuff, so just letting you know. Let's make this one yellow. We see that the 50% retracement of this low to this high, and now this is just a secondary retracement, so it's not too important, but just Gann methodologies say that you should always look for retracement levels based on these secondary retracements. We see that the yellow line, the current price of the ETF, falls right on top of it. So we're looking at 12,550 as a support level. Duplicate it again, and I'll show you the other ones in just a second. This one really doesn't tell us too much. So if I zoom in on here, it says that we pretty much broke the 12,630 level, and the next one, according to this, let's change the color. The next one, so we're looking at the pink one, it would give us a support level at just about 12,200, about 12,300. So that is our pink bracket. And then finally, duplicate this one more time and drag it to the closing lows minus the spike, which puts us at just about right here. Change the color, and we have, let's make this one green. And we see that we once again have a support level just around 12,300, 12,350. So at this point, what I can see looking at this chart is that we have a strong support level right here that the market is running into some trouble breaking through. And we even see right here on this day, this day chart right here, the daily candle, that is a hammer formation. Now that's a bullish reversal pattern, but normally these kinds of things, we need more than just a one-day reversal to reverse what was essentially a 2-month downtrend. So I'm going to say we're going to keep going a bit lower. Now, where do I think we're going to go? I think that we're going to go down to this 61.8 right here. So I would not be surprised if we get down to about 12,375 before we actually start reversing. Now, what to expect in the coming days is expect heavy volume, but little price movement. I actually looked at some sentiment indicators, and it shows that people are really scared right now. Like, the bearish percentage is over 40%, which is relatively high. Bullish percentage is pretty low on the short term. So we're getting close to an oversold extreme. And what do I think will actually lead the market back up? Well, let's just take a look. Here's our USO. You see this churning right here? It looks like we might have some kind of reversal building in oil. Why? Well, Israel. Israel, Gaza, the entire Arab world is getting into some trouble. So, energy, and you can even see there's your hammer pattern right there. Energy on very high volume, so that could be a reversal, and a very strong reversal. You notice that's the highest volume day this ETF, energy ETF, has had since midsummer. Energy, maybe materials, perhaps, but definitely energy. Alright, so that's my outlook for the beginning of the week. It's not probably the best time to start trading yet. I'd wait for maybe a little more panic, maybe a tiny bit lower in the stock market, say 1 or 2%, and then you can start buying. And make sure, big caps, no small caps at all. Alright, thank you for watching.